If you are a retired American sitting on your couch right now, I need you to listen to me for the next 3 minutes because the federal government may owe you more than $12,500, and the window to collect that money is closing faster than most people realize. I'm not talking about a scam, I'm not talking about a sweepstakes, and I am not talking about some clever investment tip. I am talking about real tax refunds, real Social Security adjustments, and real credits that you earned, that you paid into the system for, and that are sitting right now in a government account with your name on it. The dollar figure is $12,500 or more. The forms are Form 1040-X, Schedule R, the Senior Earned Income Tax Credit, the additional standard deduction for being 65 or older, and the senior-friendly Form 1040-SR. And the deadline, the reason I made this video today, is the 3-year statute of limitations on amended returns. Once that window closes on your prior tax year, the money is gone forever. So pull up a piece of paper, grab a pen, and let me show you exactly how to claim what is rightfully yours. The first thing I want you to do, before we go any further, is hit the subscribe button below this video and tap the bell so you do not miss anything else I'm about to share with you. This channel is free, it is built for seniors and retirees, and I publish a new hidden benefit every single week. Now please also share this video with one person in your life who is over 60 and who might be leaving money on the table. You probably know that person already. Maybe it is your sister, maybe it is your neighbor, maybe it is the guy you play cards with on Thursdays. Shoot them the link right now. The IRS does not advertise these programs, so it is up to us to spread the word to the people we love. Before we get into the details, let me give you a quick map of how this works so you do not feel lost as we go. There are 3 separate payouts I am going to walk you through today. The first is a refund from a prior year tax return that you can still amend using IRS Form 1040-X, which is the official amended U.S. individual income tax return. The second is the credit for the elderly or the disabled, which is filed on Schedule R, and which can be worth up to $7,500 depending on your filing status. The third is something called the Earned Income Tax Credit for Seniors, which the IRS calls the EITC, and which can pay out more than $4,000 to a single retiree with 1 qualifying child, or more than $7,000 to a married couple with 3 qualifying children. If you stack all 3 together, and if you amend the right prior year returns, you can absolutely cross the $12,500 mark, and in many cases, you can blow past it. None of this is a guess, none of this requires a tax loophole, and none of this requires a shady strategy. It is all spelled out in the Internal Revenue Code, and every form I am about to mention is a real IRS-issued form with a real number printed in the corner. Now here's the part nobody talks about, and please pay close attention because this is where the big money actually lives. The IRS has a rule buried in the tax code that says you can go back and amend any of the last 3 tax years. That means tax year 2022, tax year 2023, and tax year 2024 are all still open for you right now in 2025. If you did not claim Schedule R in any of those years, you can still claim it. If you did not take the additional standard deduction for being 65 or older, you can still take it. On a single return, the 2025 senior bonus deduction is $1,950, and on a joint return, it doubles to $3,900, which means 3 missed years of that deduction alone can return roughly $12,000 between the two of you. If you missed the EITC because nobody ever told you that retirees can claim it, you can still claim it. Each of those 3 years carries its own potential refund, and when you stack them, you can land somewhere in the neighborhood of $12,500 or more, depending on your income and your filing status. The IRS calls this the 3-year statute of limitations on refunds, and most retirees have never once heard of it. While I have you, please make sure you are still subscribed to this channel, because I do not want you to miss next week's video, where I am going to break down another completely different hidden benefit that most retirees never claim, and that one can pay out thousands more dollars on top of what we are covering today. The channel is free, the information is real, and the only cost to you is the few seconds it takes to tap that red button and ring that bell right now. Now let me set the stage for you so you understand why this matters so much right now, and why the timing on this video is no accident. There are roughly 65 million retirees in the United States, and according to the Treasury Inspector General, the IRS accidentally leaves billions of dollars in unclaimed refunds on the table every single year. Some of those refunds belong to retirees who never knew they qualified for certain credits. Some belong to retirees who thought the EITC was only for working families with children, and never realized that seniors without children at home can claim a version of it too. And some belong to retirees whose tax preparer simply skipped Schedule R because they did not want to spend the extra 20 minutes filling out a form that pays a very generous credit. Whatever the reason, The money ends up in the same place, in a holding account at the Treasury Department, quietly waiting year after year for someone to file the right form on paper. Now, here's the catch, and I want you to hear this clearly because it is the single most important sentence in this entire video. The IRS only refunds you for the last 3 tax years. That is not a suggestion, and it is not flexible. That is a hard legal deadline called the statute of limitations, and it works just like a doctor's appointment that cannot be rescheduled. Miss it, and the refund is gone forever. So if you have not yet amended your 2022 return, you have just a few months left before the IRS closes that refund window permanently on that specific year. Your 2023 and 2024 returns, on the other hand, are still wide open, and a 2026 standard deduction for a single filer 65 or older is projected to land near $17,000 or more, which means every dollar you recover now stacks on top of every dollar of lower tax you will owe going forward. The misconception I want to bust before we go any further is the simple idea that if you are retired, you do not have to worry about credits and deductions because your income is too low. That is exactly backwards, and I need you to erase that idea from your mind right now. The IRS created Schedule R and the Senior EITC specifically for people with lower incomes, and the less money you make, the bigger the credit gets. That means a retiree who collects only Social Security and a small pension may actually qualify for a larger refund than a retiree who collected a 6-figure salary before they retired. If you have ever been told by a CPA or by a generic tax software program that you do not qualify for anything, I want you to stay with me because odds are very good that answer was wrong. Drop me a comment below telling me what your biggest tax challenge is right now, because odds are good you are not alone, and the answer to your problem might be simpler than you think. I read every single comment on these videos and I use them to plan future episodes. If you are watching this and wondering whether you qualify for any of the 3 payouts I am walking through today, ask me right there in the comments section. There is no charge, there is no form, and there is no appointment needed. You just leave the question and I will get to it. Now let me walk you through step 1, and this is the most important step of the day, so please listen carefully. Step 1 is to amend your prior year tax returns using IRS Form 1040-X. Form 1040-X is the official amended U.S. individual income tax return, and it is the exact form you use to go back and add a credit or deduction you missed in a previous year. You can use it for tax year 2022, for tax year 2023, and for tax year 2024. You attach a corrected Schedule R if you are claiming the credit for the elderly, and you attach the EITC schedule if you are claiming the senior credit, and you also attach the senior-friendly Form 1040-SR as your base return for clarity. Mail the whole package to the IRS Service Center that matches the state where you lived during that tax year. The IRS will then process your amendment, recalculate your tax, and send you a refund check or a direct deposit within roughly 8 to 16 weeks. There is no fee from the government to file Form 1040-X, and the form itself is just 1 page. To give you an example of how powerful this really is, let me paint a picture based on real retirees I have personally walked through this exact process. Imagine a single retiree, age 67, living on a monthly Social Security check of about $1,800, plus a small pension of $300 a month, who also picks up a few hours of part-time work at the library each week. She filed her taxes in 2022, 2023, and 2024 using cheap online software that did not even know Schedule R existed. She never claimed the additional standard deduction for being 65 or older. She never claimed the EITC because she thought it was only for working parents, and she never looked at her Form 1099-R from her pension to make sure the IRA distribution amounts were even correct. If she amends all 3 of those returns using Form 1040-X, adds Schedule R to each year, adds the additional standard deduction to each year, and adds the senior EITC for the years she earned wages, she can pull a refund of roughly $4,000 to $5,000 per year. That lands her somewhere in the neighborhood of $12,500 to $15,000 in actual money back in her checking account, paid out in 3 separate deposits by the IRS. That is not a guess. That is the math, and it is the math the IRS actually expects to pay out. Now here is the part where most viewers click away, and I want you to do the opposite. The reason I am pushing this so hard is that the second payout on our list today, the EITC for seniors, very often goes unclaimed because retirees assume it does not apply to them, and that single misunderstanding is worth $4,000 or more every single year to anyone who qualifies. The credit phases out as your income rises, but many retirees never even test whether they are below the cap, so they leave the money on the table again and again. We are going to break that down in plain English in the next section, and I promise you, by the time we are done, you will know exactly whether you are one of those people who should be claiming it and roughly how much money you can expect to see. So stay with me, do not click away, and let me walk you through it. Step 2 is the EITC for seniors, and I want to bust a big myth right up front before we go any deeper. The Earned Income Tax Credit is not just for working families with little kids at home. The IRS specifically allows retirees to claim the EITC if they have earned income, and earned income can include a part-time job, wages from a small side business, or in some cases even certain wages paid to a family caregiver who does light bookkeeping or office work for a relative. The credit for filers with no qualifying children can be worth more than $600 for the 2024 tax year. For a single senior with one qualifying child, it can pay more than $4,000. For a married couple with 3 qualifying children, it can climb above $7,000. None of that money requires you to give anything back. It is simply a credit the IRS designed to reward work, even if that work is only a few hours a week at the community center. Now let me address the other group so nobody feels left out. If you are a comfortable retiree with stronger assets and a higher pension, you may still have money waiting in the second tier of benefits I'm about to cover, particularly the credit for the elderly or the disabled on Schedule R. That credit is phased out at higher income levels, but the phase-out does not begin until your adjusted gross income climbs above $17,500 for a single filer and above $25,000 for a married couple filing jointly in 2025. That means many retirees who consider themselves middle class or upper middle class are still right inside the eligible range. The credit is also reduced only by half of the amount you exceed the threshold, not the full amount, so a small overage does not eliminate it completely. That is a nuance most tax software and most paid preparers never bother to explain to their senior clients. Your spouse, your financial advisor, and your CPA may be perfectly nice people, and they may still have never mentioned this to you, because the credit is small enough that they often skip it without realizing how much it actually pays. Before we go any further, please drop me a comment below with one simple word. Write Schedule R in the comment section, because if you write that down on a piece of paper next to you right now, you will remember it and you will know to ask your tax preparer about it the next time you walk in. The IRS does not send you a reminder, your tax software does not flash a banner, and your tax preparer may not flag it unless you ask. So put it on your refrigerator, your desk, your calendar, on the back of your sunglasses, wherever you will see it. Just please write Schedule R down somewhere, because those 2 words are the key to the entire kingdom on this topic. Now here is the third retention hook you have been waiting for, and I want to make sure you hear it clearly. There is a program run by the IRS that will prepare and file all of these amended returns for you for free, no matter how complicated your situation is, and it is staffed by trained volunteers who specialize in senior tax returns every single tax season. The program is called VITA, the Volunteer Income Tax Assistance Program, and its sister program is called TCE, the Tax Counseling for the Elderly Program. Both programs are IRS sponsored, both are completely free, and both are open to anyone who is 60 or older or who earns less than about $67,000 a year. Both programs have AARP tax aid volunteers who will sit down with you at a library or community center and walk you through every form from start to finish. They will help you file Schedule R, they will help you file the EITC schedule, and they will help you prepare your Form 1040-X and mail it to the right IRS service center so you do not have to guess the address. There is no sales pitch at the end, there is no upsell, and there is no fee. They will simply help you, and then you will go home with paperwork in hand. There's also a tool called IRS Free File that lets you do this whole thing from your couch, on your tablet, or your laptop if VITA is not convenient for you where you live. If your income is below the IRS Free File threshold, around $84,000 for 2025, you can use brand name tax software, the same kind that big retailers sell for $60 or $90, completely free of charge. The IRS Free File program is on the IRS's own official website, so you do not need to search Google, you do not need to click on ads, and you do not need to gamble on the first result that promises free tax help. You simply go to IRS Free File, pick the software that matches your income, and follow the prompts. The software will even help you decide whether to file Schedule R, whether to claim the EITC, and whether to amend a prior year return using the 1040-X electronic filing option. If it is available for that year, you can do it in your pajamas at 2 in the morning if you want to. Whatever you decide to do, please do not pay a tax preparation chain $200 or $300 to file these amended returns for you, because the IRS itself runs a free program, AARP Tax Aid runs another free program, and VITA runs a third free program. Every one of these programs has been specifically trained to help seniors with Schedule R and the Senior EITC. The whole point of these programs is to put money back into retiree pockets, not to charge you a fee to recover the money that already belongs to you. Now let me also point you to your local Social Security Administration office locator tool, which is run by the SSA itself, because there is one more piece of the puzzle that pairs very nicely with these tax credits. If you suspect that you started collecting Social Security too early, or that you may have left spousal benefits on the table, you can walk into your local SSA office with your photo ID and ask them to run a benefit statement for you. They will tell you what you are currently collecting, what you could be collecting, and whether Form SSA 521, the official request for withdrawal of application, might apply to your situation. That form lets you withdraw a Social Security application within 12 months of starting benefits, and after a 2-month waiting period, you can refile at a higher amount. While you are sitting with the SSA worker, also ask them about Form W4V, which lets you set up voluntary federal income tax withholding on your Social Security checks, so you never get hit with an unexpected tax bill in April again. Now, before I go any further, please listen carefully as I pull the whole story together so you can remember the 3 big payouts in plain English before we wrap up. Payout number 1 is the older year refund from Form 1040-X, which lets you amend any of the last 3 tax years and recover missed Schedule R, missed EITC, missed additional standard deduction amounts, and any Tier 1 mistakes such as forgetting to file. Form 1040-SR, the senior-friendly version of the regular 1040 that many retirees find easier to read. Payout number 2 is the credit for the elderly or the disabled on Schedule R, which can be worth up to $7,500 depending on your income and filing status. And payout number 3 is the Senior Earned Income Tax Credit, which the IRS allows retirees to claim even without children at home if they meet the income rules. Stack all 3 together, and you can easily land north of $12,500 across 3 years of amended returns, with the average senior I have personally walked through this process landing somewhere around $14,000 to $15,000 in total refunds. Now for the recap and your single most important action step. Step 1, pull out your paperwork. Step 2, visit IRS Free File online or call 1-800-906-9887 to find the nearest VITA or AARP tax aid site in your zip code. Step 3. Bring your 2022, 2023, and 2024 tax returns, your SSA award letter, your Form 1099-R from any pension, and a photo ID. Step 4. Ask the volunteer specifically to file Schedule R for each year and to claim the EITC if you had any earned income. Step 5. Ask for Form 1040-X to amend any open year that missed those credits. That is the entire list. There is no 6th step and there is no catch. You are done. Please leave me one more comment before you go. Tell me whether you have already called the IRS this year about an old refund, because I want to compare your experience to others who have already gone through this exact process. Some of you will get a check within 8 weeks, some of you will wait 16 weeks, but every single one of you who qualifies is going to get a real check from a real government program for real money that you earned a long time ago. Now, if this video helped you even a little, please hit that subscribe button right now and ring the bell so you do not miss next week's episode. I am going to publish a full step-by-step guide on the specific line-by-line amounts to write on each line of Schedule R, including the updated 2025 senior bonus deduction, the new 2026 standard deduction amounts, and the latest phase-out thresholds the IRS just published. That next video will be the cheat sheet you need before you walk into a VITA site or sit down with AARP Tax Aid. Subscribe so you do not miss it. Share today's video with one retiree in your life who might still be leaving this money on the table, and I will see you in the next one.